nobody should do what I did.
Why do you say so?
Over investment ho gaya. So I realized in my head also that I live in a small bubble of urban English speaking people.
Yeah.
We often focus highly on returns and isko itna mil gaya, usko itna mil gaya. This whole permission business is absolute nonsense. They have to make it zero fees. Even now it is the sophisticated prop traders and the hedge funds. This is a transfer of wealth which our country simply can't afford. Currency, I think, is the last and final nail in the coffin of always be domestic, always be in India.
Hi Neil, welcome to Ekstory.
Thank you so much for having me.
It's a pleasure always to speak to you. I've met you a few times prior, and always it's been a very enriching experience. The kind of insights you share about the industry, especially about something which even I'm very passionate about, is the investment advisory piece. We all have known Neil as a journalist from Mint. Now we know Neil as somebody who is heading Thefynprint and Finwrite. But there's always a lot of things that would be going around in the background to make Neil that journalist from Mint to today an entrepreneur. We want to know that side of Neil, and it would start from your very younger days. So I went through some of your public videos. I don't think so you ever talked about your childhood. How was it, and how did you come up to this level and to be this journalist that you are today? And it's always said that the journey is way more important and is way more beautiful than the destination.
Absolutely.
So we want to know that journey.
Sure. So a lot of my journey has been shaped by my family, and actually this is true of most of us. It's just that we don't talk about it.
Right.
So I'm going to go a bit further back than my childhood, to be honest.
Okay.
Because some of those influences come from decisions taken maybe by my grandfather. So my grandfather was a wholesaler of mangoes, and thankfully quite a good one. So he made enough money to go and buy property. He built a building on it. Then he gave the entire building out on rent, except for the flat that he needed, right? Sounded like smart. That's what, like a smart decision. That's what most Indians of his generation did.
True.
And then along came the Bombay Rent Control Act.
Okay.
And all of those tenants were frozen at 100 rupees, 200 rupees.
Wow.
For years together. So when my parents inherited the properties that my grandfather had bought, they had to spend their entire lives in court kicking out those tenants one by one. And even then, ultimately, it would come to a negotiation. So you would get like one favorable interim order, and then they would come to the negotiating table, and then you had to pay them. So they had to repurchase the same property which my grandfather had purchased. So
repurchase it?
Essentially, because you spend money on lawyers' fees, then you spend money on the negotiation, then you pay them off. So ultimately, many times the price of the original property you pay for regaining control of it. So that taught me the first lesson that shapes me as an investor and a journalist today, which is not to over leverage on any one asset, and especially not real estate, because I've seen the horrors of real estate. A lot of young folks today don't have that family background. They don't understand what it is to be forced to go tariq pe tariq for years together. So that was my grandfather's story, and my parents are doctors.
Okay.
So they, after initial period of struggle, they sort of did, with most doctors, you have this extended education, then first many years you struggle, because they were in private practice, they didn't have a cushy job. So they built it up dhire dhire, and their maximum earning happened probably after 50. So it is at that time that I was in my college days, and I sort of was given the job of figuring out family investments and where to put the money, etc. And it's at that time that sort of private sector banks in India were booming. So had I been born,
This is when?
this is approximately 2010 के बाद, धीरे धीरे, so 2012, 14, etc. So we had a private sector bank, RM, and at that time I had not studied finance, so I had no clue about this, about the ecosystem, nothing. Doctors are the prime bakras, number one bakras. So my parents were missold everything, you name it, they were missold it. Insurance missold. एक insurance linked pension plan था उस time, that also they were missold. Every horror story, mutual funds also, when closed-ended funds were in fashion, they were given that. Whichever was earning the highest commission, they were given that. They were a case study in how consumers are ripped off in this country. So, so that is when I decided to study finance, and I did a second degree after my initial degree in law.
Okay.
And then I did my CFA level 1, and I wanted to be an advisor, an RIA.
Okay.
This is way back in 2016.
Okay.
Now, I did briefly work for an RIA in Mumbai, but the pay was quite low at that point. So it didn't last for too long. And there was by chance a vacancy in value research.
Okay.
So when I heard of it, I jumped at the thought, and I applied. I was thankfully selected by Dhiren, and those were the two transformative years of my life, because Dhirendra Kumar, the owner, he's been in financial services since the early 90s, and he has this very strong sense of integrity and honesty. Even if it costs growth, even if it costs relationships, he will say what he feels. So those were two really formative years of my life. Then I briefly worked in a fintech in Paisa Bazaar, and then in 2019, my former boss at Mint, she just messaged me on Twitter one day saying that Mint has a vacancy, do you want to join? And I was so blown over that I didn't even negotiate. I was like, yes, where's the offer letter? And so I joined Mint, and the world of media, it was a first for me. I had not studied journalism. I had earlier no inclination I would become a journalist. So it was really exciting. You're writing something, it's going on the front page the next day, or it's going into a national newspaper the next day. And I was happy, things were going well. Then the pandemic hit. And the pandemic shook every certainty that I had. So before the pandemic, financial media was essentially a few players, and they controlled distribution. So, opinion was formed by just a few journalists. You had this sense of security, you had this sense of responsibility, also of power, because what you said was carried to lakhs of people. But the pandemic in a sense destroyed the industry, in a sense disrupted the industry by giving rise to the influencers. And even now the industry is in decline. It's going to be a slow, long decline, but that's where we are at with media. So one thing that happened at that time is, because all of the media houses were losing money, they fired a whole bunch of people. My boss quit, her boss quit. So they had nobody left, so they promoted me. And thankfully that gave me the freedom to run my own team. And it allowed me to experiment with the infographics that later on we became famous for. So that was another sort of great time in my life. Fast forward to, I guess, 6-8 months ago, I felt that I had to do something more. I had to engage with people a bit deeper, because when you write something, you don't know if somebody's going to follow your advice or not, act on it or not. I wanted to be part of that last mile, become a part of a financial services firm that delivers services. So And I felt that this particular service, which is Provident Fund withdrawal, is a huge pain point. There are 1.6 crore rejections every year of PF withdrawals in this country.
Wow.
And the sort of transformative moment for me was when I had gone to interview somebody about who had cancer, about his end life planning, financial planning. And one of the things that came out of there is that he was not able to withdraw his PF money despite having cancer. So we wrote about it, it became viral, then the EPFO got in touch with him and he got his money. But it struck me that there are thousands and possibly lakhs like him. So that was one of the reasons why I left, and when I sort of saw this business, I felt I wanted to be here in this space. And at Finrite, at Thefynprint, we will build businesses around similar pain points. Provident Fund is the starting base, but we think there are two other areas where there is complexity and people need help. So one is in inheritance planning and wills, and the second is in global investing. Sorry, a very long answer. I started with childhood and I ended with my latest.
No, but I'll take you back again because I have some questions on childhood.
Let's go for it.
Yeah. So, firstly, I kind of never knew about this Bombay Rent Control Act. When did this end? Is this still active?
No, thankfully no. We have the Maharashtra Rent Control Act now, and people have figured workarounds.
Okay.
So most people in Maharashtra you will find do leave-in license. They don't do lease.
Yeah.
Under leave-in license, it's easier to kick out tenants who are not cooperating. But back then, my grandfather didn't have that foresight.
Right. And how old were you when your parents were fighting all these battles? Like you could understand that there's a lot of hardship that they were going through.
Yeah. As a kid, because it comes home to the dinner table, to the breakfast table. Often couples also who are under stress because of external reasons. They have disagreements, they have fights. You as a kid, you're exposed to all that.
Right. So those memories are very strong about the over leverage on one asset that you had and the hassles that a common man has to go through.
Yeah, the stress it causes in life. So sometimes you have to think of finance also in terms of the human cost.
Yeah.
We often focus highly on returns and isko itna mil gaya, usko itna mil gaya, but the value of a peaceful, stress-free life is probably the greatest success one can have.
Well, just to add on to what you said, how would one quantify the kind of cost that one would have to go through these hassles, right? It will only be known in hindsight, because when any of us are doing it, we don't realize that.
Yeah, very true.
How does one kind of safeguard, since you are all in for that personal finance space and you always wanted to be an RIA, how would one actually safeguard themselves from this? Like, is it just the simple line answer that, hey, I need a good night's sleep, and anything that does not give me a good night's sleep, I'm not going to do?
Yeah, it's not as straightforward as that. But I think the answer is in education.
Okay.
So before making that leap into either a new asset or a new product, you have to spend time studying, or you have to have an intermediary who really is unbiased, who really isn't going to look after their own P&L first.
So spreading that awareness, education is what you're
is crucial, is so crucial, because I've seen the damage, like I said, at that time, I don't think, the RI profession came into existence in 2013. So in 2014-15, most families were being serviced just by bank RMs and being missold things right and left.
You alluded to missold even at the start. Did Kannan take your parents as a case study?
He should have, no, he should have. He did not, because actually people have had much worse journeys than my parents. Farmers in Rajasthan being sold insurance policies as if they're FDs.
He's done a wonderful job by doing that. At least somebody took it up, and spent.
It takes courage, especially in this industry, to say it out so loudly.
Yeah. He's done a fabulous job, and the reach that he's got is absolutely amazing.
Yeah.
Everybody should watch that.
Absolutely, 100%.
What is going on? So, you're the only child, Neil?
No, I have a sister.
You have a sister. Okay. So you mentioned about doing law, and then that mis-selling journey kind of forced you to do something in finance. So you took a second degree.
Yeah.
So that was a master's in finance,
No, I did a bachelor's.
in a bachelor's in finance, and then you pursued for a year CFA.
Yes, so I did a bachelor's in economics. Then I did
Okay.
a postgrad in investments.
Oh wow.
Yeah, spent a lot.
So you have 3 degrees.
I spent too much time studying. Nobody should do what I did.
Why do you say so?
Over investment हो गया in studying. I mean, if I had spent that time, working, I would have been better off.
Okay.
But khair, yeah, CFA level 1 happened after that, and I passed it. So after that, I was like, अभी बहुत हो गया. But I have huge respect for anyone who's completed it.
CFA. Yeah. It's a tough thing to do.
Yeah.
But how did Mint happen? Was it just like you were at Value Research and you randomly got a call? Was
No,
it like
no.
serendipity? How did that happen?
Yeah, so Deepthi Bhaskaran, who was my boss back then, she was heading the Mint Money team. She used to follow me on Twitter, and I was quite vocal on Twitter. So maybe at some point she thought that this guy looks interesting, on a chance, let's message him. And then life comes a full circle because now Deepti's back at Mint, heading the team that I took over
Wow.
after she left. So
That's really satisfying to you as well, right? Because she got you in and then when
Yeah.
you moved out, now she's back.
yeah.
Can I just ask you, since you mentioned Twitter, I always wonder what does this name mean, Actors Day? Or am I just pronouncing it right?
You are pronouncing it right. It means act of God. I
Okay.
had given it at a time when I was a kid and very, very pompous in my head. So I'm kind of embarrassed, but I stuck with it. So
No, but it's very intriguing. Like every time I come across your post, I always wonder what this name means.
yeah.
Did you ever get any influenced by the movie Oh My God, like Act of God? Or something?
No. So when I was studying law में बहुत सारा Latin होता है.
Okay.
Because a lot of the principles of law come from common law of England, which in turn was influenced by Rome and Latin.
Okay.
तो वहाँ से आ गया.
Actors Day. A very interesting name. Definitely intriguing. What really shaped you towards having this inquisitiveness towards personal finance? Why did you say that you were always inclined to do what an RIA does? It would have been something that was pivotal, that would have shifted you from law, from coming from a doctor's family to personal finance. Like there's no connection that way.
Yeah, so one trigger was of course that my parents were at the receiving end of the financial services industry, some of the malpractices in it. The other thing, especially on RIA, I felt that just as you have a doctor who prescribes things, who is not making their money by those prescriptions but by a fee, you have to have a body of people who make money through a transparent fee. And I know it's had its challenges. Even now, the profession is dominated by distributors. And I'm not saying all distributors are bad. Many of them do a pretty good job. But I think in the long term, as a country, we have to move to a clean, fee-based model. And that was my sort of reason also for getting into it.
So, you said that in 2014-15, you ideally looked at this space. The regulations came only in 2013.
Yeah.
How did you come across them?
I did a Google search.
Okay.
And literally, so I worked for Vishal Dhawan for a few months, and like his plan ahead was one of the few results that showed up. So I applied there.
Very interesting. How was school life like? I mean, you seem to be a very studious person, very nerdy.
But I never taught my class. One of my regrets in life, I never taught my class. I was maybe.
Perhaps that is why you're topping things right now in life.
It's very kind. No. School was nice. There were particular subjects that I took a huge fancy to. It's kind of ironic. I was terrible at math.
Okay.
I loved history. I loved geography. So yeah.
So you've been born and brought up in Pune.
Yes.
Which part of Pune?
It's a place called Mitramandal. It's near. If people from Pune know Parvati Hill, so it's near there. Swargate.
Swargate. Okay, yeah, that's the thing which even a Mumbaiker would have kind of heard about Pune.
Yeah.
And then college was?
Ferguson initially, 11th, 12th.
Oh, nice. Okay.
Then Symbiosis.
Okay. So then, I mean, I think that J curve or your, the steep that you go, the kind of curve that you will get once you start doing.
Literally, I moved down the road. So like FC is in between my house and Symbiosis, and then I went a little further down the road to Symbiosis.
No, but in terms of quality of college is what I meant.
Yeah.
So, very interesting. Since you never had affinity towards numbers, and this psychological barrier was always one thing that you had of your parents, how difficult was it for you to transition when you went to the RIA space, and then when you went with value research, and then with Mint? Did it take a lot of effort, or it was just that you were always scared of math and that was just a block in your mind?
So two things. I worked really hard to remedy my sort of issues with math. So 11th, 12th, I took, and I had enough sort of marks to go into science, but I took arts with math. And I spent practically all my day just doing math because everything else was so easy. And when I eventually studied economics again, it's pretty rigorous and calculus. And so I tried my best to remedy it there. And then I discovered that finance is not math. I mean, it's much more human emotion. It's much more common sense. So it wasn't a big barrier. Now, obviously, the parts of finance I worked in, thankfully, were not a big barrier. But if I were to be a quant, they would probably reject me tomorrow. If I tried to be a sort of high-level portfolio manager, they might reject me. So I haven't been in those parts.
Right, and that's why the personal finance thing, which always involves with emotions of planning.
Yeah, much more humans. Yeah,
much more. And the asset allocation part that you alluded to, which I'll come in due course. Since you're doing Thefynprint and Finwrite both together, is it safe to assume that the journalism out of Neil Borate will never ever go away?
Never. Once a journalist, always a journalist. So the Thefynprint is actually a lot like Mint Money. We have the same ethos. We do investigative stories even if it's uncomfortable for our parent company. So in some ways it will also get better because I think we'll be able to carry our work to a larger number of people.
Do you think in this age where we are today, what is the best medium to take this personal finance to the masses? Yes, we have the newspaper, the physical piece, the digital piece, and then there's the other side, which are the influencers, right? Once you and I also go out there and talk on Instagram, we become influencers ourselves too. Now that's a dark side of it, but there is a beauty to it. But what is the right way, and how do we as industry people build that trust amongst our audiences?
Yeah, I think it's just a question of learning a new language. So because I'm a millennial and most of my formative years were spent at a time when Insta was not around, I couldn't use it for a long time. Like I thought it was only there to put photos of cats and watch time pass videos. The pandemic proved me wrong. And even after that, for many years, I had a very hard time learning this language, adjusting to this. Of late, after my leaving Mint, I've been able to figure out better how to do reels, and now I'm doing quite well on Insta. So we have to just embrace the new language. There's no other way to do it.
But how do we differentiate that, or how do you differentiate that you are not like the other influencers who's selling short-term gratification, but is here to educate masses? Or is it just a long waiting game that you are ready to play?
No, I was pleasantly surprised. Like I am doing well on Insta without saying anything different. Okay. I speak normally, I don't dance around, I don't do skits. I put my standard infographic there just like I do on other social media platforms. Then people understand it, they like it, they respond. I think to myself, why didn't I do it earlier? I was just being silly.
Okay. So I want to say that fine print one day is going to start a lot more about digital videos, the ones that you've been doing it. On
Absolutely, absolutely. In my head, it's like I was in this comfortable swimming pool of a career where things were set like clockwork, and I took myself out of it. I threw myself in the river, and now that I've done that, I'm forced to learn these things, and it's helping me.
How different has it been from mint to fine print? Because I mean, it's the same sort of ethos that you follow, but how different would it be? Apart from the entrepreneurship side of things, no, I'm not going there right now. How different it is?
So thankfully, on the content side of it, I've reached a level of seniority where no door is closed to me that was open at Mint. The same doors are open, same people give me interviews, talk to me. None of that has changed. I guess where it has changed is when you have the comfort of a newspaper carrying you and an entire setup that there's a desk, they check all of the copies, then it goes through a whole process and then it's published. You chill a little in your head, but here, because when you are the whole and soul, थोड़ा ज़्यादा involved होना पड़ता है.
But do we see fine print ever becoming like proper daily newspaper?
No, because the age of print is anyway over, so we wouldn't want to do it. What I hope the fine print becomes is two things. One, of course, digitally people follow it in much greater numbers, including on social media. And the other is we are able to build a community, which we are already building on WhatsApp, where people have this space of freely sharing knowledge, useful knowledge, and nobody's trying to scam them or sell them something willy-nilly.
Okay. A bit of contrary and radical. So, say for example, we always talk about the depth of the Indian markets, right? If I say the equity markets per se, we say that we don't have many companies, and that is why the listings need to happen more. But with more listings, we are going to have more such accidents as well that we have always seen in the cycle. Don't you think that this journey of mis-selling or being mis-sold is also a very valuable lesson that every investor kind of should be going through to learn the brighter side of things? I'm very contrary and radical, but I've realized that all of us in life have that J curve. We lost money in the markets and then we kind of make. Because then you have a lot of value of the true people in the industry of the good work that you're doing.
I agree. It's like paying your fees to the market.
Yeah.
I think if people are able to recover from that pain and learn the right lessons, then yes, it's actually a good lesson. I'm not sure that everyone is able to necessarily recover. Sometimes the blow is too hard and it destroys a lifetime of potential learning that you might have otherwise had.
Right. But we have 65% of the population under the age of 35 and 40. We are for the next 20 years going to breed new millionaires, new people coming.
Yeah.
So there's always going to be that diaspora. How can someone like say a Kanan Bahal make this a regular annual thing to make sure that this mis-selling becomes lesser and lesser, because it's difficult to quantify at the end of the day?
No, ultimately the government has to do its job. The regulators have to do their job, which clearly is not happening with insurance right now. So my hope is that if enough of us speak out, it gets heard in the finance ministry. I of course asked finance minister herself in a public event that why is this going on, and she acknowledged the problem. So hopefully if enough of us speak out, they will take action.
Right. You mentioned about asking a question to the finance minister, and journalism is about being bold, and as cliche as it may sound, but from the outside, if I look at a layman, we typically try to avoid making a comment against any of the institutions in public domain, or would even question. How does one come up with that courage that you say that no, I'm going to do it? Is it just that you're a journalist and you feel you need to do it, or you actually feel that no, I need to stand up for something?
No, it's to do with being a journalist. If I was in any other profession, I would have probably not said it.
Okay. So a lot comes from the profession. It's up to you to say it so openly because people would realize that they want to prove a point and that is why they would do it.
Yeah, no, I don't think I would have otherwise said it, because it's like this: if journalists don't speak up, who is supposed to speak up? I mean, we are supposed to be the voice of the people.
Right.
At an idealistic level, I know most of the time we are not, but sometimes.
No, I mean, see, every one of us has biases. I'm sure even you would have, because you're humans. But at times to speak up to things is important.
Oh
Like,
yes, oh yes.
I mean, and I always wonder that how do you get that courage? Yeah, come on. I mean, you are a journalist, but
No, I've been lucky, and I mean, फिर भी democracy है यार. ज़्यादा से ज़्यादा क्या होगा? They'll slap a case on you. They'll try to get you fired. ठीक है, it's the price for democracy.
but when just on the personal side, when you told your parents that you want to become a journalist, what was their reaction?
Before that, I had given them many other shocks, so I think by then they were kind of like,
This guy is going to give shocks all around.
जो करना है वो कर.
But I'm sure they're proud today to
Yeah.
look at you.
Yeah.
You know, being a public figure, fighting for the right causes, fighting for the right people, the masses, and taking things. What do they feel? I mean,
So it's interesting. Both of them have very different consumption of media. So my dad consumes. He gets Mint at home, so he's been reading what I write for many years. My mother does not read Mint. She completely was oblivious to what I wrote until I did one podcast in Hindi with Grow.
okay.
And then she was like, अच्छा तुम ये करते हो. And then finally I got through to her. So I realized in my head also that I live in a small bubble of urban English speaking people. And
Yeah. And that was my question around 5 minutes back, that how do you take yourself to the masses? I mean, it's very important because that mis-selling that is happening at a way lesser scale in the urban arena as it's happening and as compared to a tier 2, tier 3 city. And that's where you will have to reach. Now, how does one go there? How does one make sure that the reach is that big?
I will be brutally honest here. The vast majority of the financial services industry will never go there. It will never find it economically viable to service the retail masses. And even now, whatever little has been done for the retail masses by, let's say, MFDs across the country, increasingly their costs versus revenue is getting more and more adverse.
Yeah.
And I've spoken to people who run large wealth management firms, and they are saying it's the economics is just not working out. So what will then happen is that large financial players will try to give digital or robo advisory to the masses. There will be nobody for them to call and talk to. And I don't know if the private sector can ever fix this problem. That's the hard truth.
Okay.
If you're rich enough to afford an RIA, you're lucky. Otherwise, sorry, it's not going to happen. I know there are all kinds of initiatives for financial literacy and inclusion, and all that is great, but at the bottom end of the pyramid, it is going to be a hell of a lot of mis-selling.
Since you spoke about economics, and you're doing something with Thefynprint and Finwrite, you think as much as 1.6 crore applications are there, it is economically going to be viable for you to take this journey long?
It's not. So
Then why are
currently,
you doing it?
good question. So currently we serve people who have an average EPF balance of 10 lakhs.
Okay.
These tend to be urban professionals who have worked in 2-3 jobs, who are fairly senior. Now, can we go from there to maybe 2x or 3x of our market for that full service? Yes, I think we can. But can we go to that 1.6 crore? Very unlikely. So, I mean, that's okay. We have to live with it.
But then, even serving those small number of people, is it going to be viable on the economic side for you to take this up? I mean, you're sure you're solving a problem, and I have something to say, but I want to hear something on this from you. That what is the mindset, right? You said that it was a cushion, it was a small bubble element. To now, okay, fine print is in the same ethos, but FinRide is something very different. Not many companies are doing it. A handful of 4 or 5 in our country as of now.
Yeah.
What is the thought process on that, and how do you think you will be able to scale, or you think that no, it's going to be a challenge one day?
So we are trying to work on, to some extent, finding an AI solution, to some extent creating a tool that people can use at a very low cost, or even to create a sachet solution where maybe we can't assign. So currently what happens is, when we get a case, it might take a month or two to resolve it. So this involves, if there's some issue in the employment history, then doing a joint declaration and getting it fixed, then finding people's older PF accounts. It's a high touch, high engagement kind of service that I don't think we will be able to offer to somebody who has, let's say, 50,000 rupees or 1 lakh in their PF account. The fees would be prohibitive. But if we are able to come out with a tool or an AI solution, then maybe it can help. Thankfully, the EPFO has, with the recent reforms, I think eased the problem quite a bit. But let's see how it plays out.
Right. So, I mean, the one thing which I wanted to share is often we try to look at businesses or starting something of our own from perspective of profits. But actually, if we look at the history of businesses, they were actually meant to solve a problem, and profit was a byproduct. I feel RIA is also something of that sort.
Yes.
And I think you rightly mentioned that if you are rich enough to fund yourself being an RIA, then you can take up, because it's a genuine problem.
Yes.
Might be too early to ask you, but you think you'll be open to raising funds for FinRide tomorrow and going really to national level and trying to solve this problem, because it is a very big problem.
So funding, of course, we are a startup and we'll raise angel and Series A and so on. Will we go mass in the way that fintech apps are? I don't know. Because we don't want to, just for the sake of growth, grow.
Right.
Only if we are able to develop that tool or sachet product, then we can go mass.
Okay. I've been privileged to be a part of the fine print community on WhatsApp. The multiple groups, they add a lot of value. And you spoke about international investing being one of the things. But before that, you've been a big proponent of NPS.
Yes.
And you've spoken multiple times on forums, platforms.
Yes.
But if you had to really today have those 10 minutes to yourself and say that why NPS is important and why it's a recommended thing for everybody, I want you to have those 10 minutes and explain it as simply as possible.
Sure.
Yeah.
So to have a good retirement product, you need a couple of things. Number one, it has to have growth potential, compounding potential. That currently resides only in NPS as a dedicated retirement product, because let's look at the competition, right? EPF managed centrally by a board, mostly invests in debt. The interest rate is 8.25%. PPF managed by the government, 7.1% interest rate. Insurance policies full of commissions, not really in the interest of the consumer. So that leaves really only one option for retirement. Now, of course, people will jump and say mutual funds, and I'll address that in a minute. But as a dedicated retirement product, only NPS is there in terms of that compounding potential. Second requirement is low cost. Again, NPS beats everything else hands down. the NPS pension fund manager fees are currently capped at just 0.09%. With the new MSF product, there is a proposal to raise it, but again,
what is MSF?
Multiple scheme framework.
Okay.
These are the new schemes that will come into NPS with these reforms. They have already been launched actually. So even there, the expense ratio goes to 0.3%, and there's an incentive to take it to 0.4, which is still nothing compared to even a mutual fund. Let's forget insurance policies, but mutual fund. Yeah.
Also, yeah. Right.
So NPS still satisfies second criteria, low cost. Third criteria has to be lock-in. The biggest problem with retirement saving is lack of foresight and discipline, that we think what will happen when, who cares 50 years from now, what will happen, who knows, why are we locking in our money, etc. With other products, people pull out their money too fast. So NPS has that lock-in until the age of 60. And even with the new MSF schemes, there's a 15-year lock-in. So that is why I think NPS is strong. Now to that you can add the tax advantages. So old regime still has ATC, it has ATC CD1B, so 2 lakh can go into NPS with a tax benefit. New regime has employer contribution to NPS tax free. And perhaps the greatest tax benefit of them all is the tax on, or the lack of tax on rebalancing. It is this beautiful wrapper where you can invest in equity, corporate bonds, government bonds, and switch between them, rebalance between them without paying any tax. And people might think, nahi, tax should not distort decisions, returns are what matter. It's all well in theory. But in practice, when you suddenly have a surge in something, equity, debt, or gold, tax weighs heavily on the mind. I mean, it's happening with me now, like with that whole gold rally. And I have invested in a gold savings fund, and that has shot up quite a bit. And I keep thinking to myself, I need to cut it down, I need to take some money off the table. But the tax bill is a big reason why I've done nothing.
Right.
So if they include gold and silver in NPS, which is a proposal right now before the regulator, and if they broaden out the universe, so right now it's top 200 stocks, if they make it at least top 500, NPS will become this amazing wrapper in which you can compound your wealth for decades without paying any tax.
Why do you think the government and the regulator are really open to push the boundaries with this product? What is it? Usually you will always see a resistance from a regulatory body, but for NPS they have been very forthcoming, welcoming in the last few years. Why do you think so?
So I think right at the start of the NPS, the regulator kept the fees and commissions extremely low. So nobody sold it. For all of these years, even now the private sector participation in NPS is abysmal. So I think the government feels that there is no harm in giving incentives. It doesn't move the needle for them in terms of tax. Things might change, 20 years from now if there is like a huge shift into NPS. But as long as the fees and commissions are as low as they are, even with the new proposals, I doubt that's going to happen.
Okay. I mean, you mentioned about most of the times the retirement corpus being blown out. I think there's a huge vacuum in terms of literacy because people know about being missold, insurance and all, but seldom we hear stories about retirement corpus being blown out and people not actually having the right kind of money in retirement. Is it actually very rampant? Is it an important problem where actually people are facing that?
So again, we have to go back to the Indian family and society, right? Our parents' generation still had this traditional thing where the kids would support the parents. So I don't think they thought that much about their own retirement planning. Whatever they thought was in terms of real estate and gold. Now, with our generation, I don't think we assume that our kids are going to support us. And so therefore, it's the first time in this country's history where we have to think of this problem in our working years.
Okay.
So that is why I don't think we've seen too many stories in the previous generation of a failed retirement plan, because kids were the retirement plan.
Right.
But we'll see that happening now.
Right, because the mindset change.
Society has changed. Kids don't support parents by default anymore.
Yeah. The nuclearization and all
Yeah.
that is going.
Yeah.
Interesting. You also mentioned about, just slightly digressing for a bit, about inheritance, and because it involves also about retirement planning, and where you see that kids are not going to support their parents. In that case, you still think will and a trust will be relevant because it is about succession at the end of the day. So, is it kind of contrary to the other side of the spectrum, or there will be still need of this? Because here there's a genuine pain point of problems, because you have to go through a probate or a Hindu Succession Act, that sort of a thing.
So I think let's first talk about our generation, right? Our parents are old. Many of them don't have wills, and it's a very awkward conversation. So we don't want to go and tell them every time we meet them that will banao. But what is the alternative? When they pass away, in fact, forget that stage. Even before they pass away, there'll be a period of quite grave illness in many cases. They will not be able to look after their own affairs, and if we don't take precautions now, then at that point we'll be in a soup. So if they pass away and there is no will, then you have to get a succession certificate. That costs 10 times as much. Do we as families want lawyers to get paid that much? I don't think so. So I think making a will is something that we should all have that conversation and invest the time. Not for our kids, do it for us.
Yeah. So coming back to NPS, I just kind of put this because it was a contrary thought, hence I thought I'll just pick your brains on that. So if you think that the private sector is not too gung-ho about it because of the kind of money that they are going to make, who are going to be the right people to push it, this particular product, and tell people? And two, what is the right age bracket to start this? Is it at the very start when you start your job at around 25? Is it 30, 35, 40? What is the right age?
Sure. So right age is very easily enough answered. Earlier the better, because your compounding starts earlier. To the extent where the government introduced NPS Vatsalya, which you can do for your kid, a lot of people say, why do I need to save for my kid's retirement? And I agree, it sounds a bit silly. Of course, there are counter arguments. You can withdraw money from NPS for education also. It's a multi-purpose account. But that aside, I think as soon as somebody starts working with their first job, some money, however small, should go into NPS. Now, in terms of who is going to go out and sell NPS, now that they are reforming the product and they are slightly increasing the expenses, some of the more, I think, responsible parts of the financial system will start recommending NPS. I want to be very, very realistic about this. I am also part of the PFRDS media committee, but I think as long as the commissions are low, everyone is not going to sell it. It's just going to be the responsible end of the financial services industry, and that's good. Let it be that way.
Yeah, let it be small and take its own time to blossom.
Yeah.
Right. But is there enough history and trust for an individual to put their money into an NPS and go with a private player? Because ultimately money is all about trust. And when we are comparing it with an EPF and a PPF, how is that barrier being addressed? How does one, the informed spectrum of the society, convince his or her client to go for this particular thing? Or is it backed by the...
So thankfully the pension fund managers are the same institutions that are so familiar to us, right? And HDFC and ICICI and Axis.
Okay.
And now they have a history of, so if you just take the private sector entry 2009, So they now have a history of 16 years, right, which is
Right.
considerable.
Okay. So there's enough history for everybody to place.
Yeah.
You mentioned about withdrawal, right? And there are certain aspects under which you can withdraw. How difficult or easy is for one to withdraw that money? 25% of the contributions is what is allowed at one point in time for 3 times in the NPSI. Is my understanding right?
Yeah.
So how difficult or easy, or do you have to submit a lot of documents, because people don't want to be held to something of their own, right?
Yeah, so thankfully it's quite easy. Unlike the EPF, the NPS was not built on a 1950s law, and even the website has been probably made in the 2010s, so it's not horrible. No, really, I mean, I have no qualms saying it. The EPF website has probably done a PhD in consumer unfriendliness. So NPS is not a challenge for withdrawal.
Not at all a challenge. So either it's for the education or any kind of emergency home loan, it's very easily.
Yeah, you can withdraw for education, home buying, marriage, even things like starting your own startup. Like there's an actual section.
Yeah, I mean, I read it and I was so surprised about that.
Yeah.
Is it a recent change?
I think a couple of years ago it happened.
Brilliant change, I mean. But don't you have to submit documents for that or something?
Largely, they don't require documents.
Wow. That's amazing. For medical expenses as well, right?
Yeah. And they're proposing to increase the number of grounds, so now it'll be even easier.
Wow. You think this 25% will go higher to a 50% withdrawal? You think so?
So it has so partial withdrawal, I don't know. Maybe since EPF has made it 75%, maybe PFRDA will also increase the NPS amount. But the tax will not change. So even if they say you can take out 50%, that additional 25% will probably be taxable.
Okay. Understood. So all in all, it's a very interesting product and people should be looking at. And people so you mentioned about the old regime. So people in the new regime, how can they be benefited?
Such a no-brainer, because new regime has hardly any deductions. This is one of the few deductions that are there. Absolutely use it.
So what are the deductions available, if I may?
In the new regime, apart from NPS, there are no significant deductions. There is one about, so if you've given a house on rent, then the interest that you're paying for that same house, you can offset it against the rent. So very, very limited things. NPS is probably the only thing that comes to mind.
So what is the NPS limit available for deduction?
Up to 14% of your basic salary.
Wow, it's a good amount.
Yeah.
So it's the only thing that is available in the new regime, right? So
that's correct.
I really wonder that not much is being talked about and written about.
If you take away the commission, nobody will talk about it. India functions on one thing and only one thing.
Yeah, actually, so surprising. I mean, globally, if you go to see, and you mentioned yourself that advisory is such a big piece, and India has this very different model. Like quick commerce is for India, but so is commission and distributorship. I don't think that exists in any of the other parts of the world that way. Is it something to do with, we don't have a habit of paying money upfront? Does that always make things very opaque, where people are like, yaar chodna yaar, maangne se cha, let's have a workaround around it?
You'll be surprised. Going back to my parents and their medical practice, the one thing that would make my mother's BP shoot up the most is patients haggling over the bill after being discharged.
Yeah.
Because she would say that I have woken up at 1 a.m., 3 a.m. at night to cater to them, to save their life in some cases, and now they are fighting over 100 rupees, 200 rupees.
Yeah. I mean, it's a pity, at a lot of point, and you feel that once you do the work, you still have to go and ask for money. It's not a good feeling.
I mean, just imagine if a doctor has to struggle for this after saving your life, फिर तो finance में.
Just to pick your brain, you think the way the Indian society and community is changing, where we're now slowly becoming more open to subscriptions, thanks to Zomato or an OTT platform, or some of the subscriptions in the financial markets, You think that will create a mindset shift of people paying for the right advice, right things?
Yeah. I think it's already happening, especially in the urban educated space. I did a poll on Twitter a couple of weeks ago where I asked people which of the four models would you go for? Distribution, RIA, which is a percentage of your portfolio, RIA, which is fee based, or DIY. And you'd be surprised the vast majority of people said fee based RIA.
Fixed fee based.
Fixed fee based RIA.
Oh wow. Okay. But do you think it's viable, there being there a cap of 1.5 lakhs if you just do a fixed fee based as against an AUA based?
So I think it is one of the reasons why, from a consumer's point of view, you would want to go to an RIA, right? Because if if your portfolio is going from 1 CR to 2 and 5 and 10 CR, do you really want your intermediary's fee to go up every single time? If I were a smart consumer, I would say no, I'm going to sit down with you, I'm going to negotiate.
Right.
And hopefully this 1.5 it is now, right? So
Yeah.
hopefully they will extend it every few years so that it's not some
Cap. Yeah. Let's hope. I mean, a lot of slew of good changes that have happened in the last few months per se, definitely.
Yeah.
So, you've been a big proponent of the RIA ecosystem, right? And we all know that, let's say that a regulator needs to do X, the regulator needs to do Y to make it more friendly, more viable. That's on one side. Now you're an entrepreneur, right? And you'll also agree to the fact that a lot of things are done by entrepreneurs themselves, where they themselves take upon them to solve problems. What is that one thing you think the RIA community or the RIAs in India need to do to make sure that they are relevant, they are the right people, they are heard by the masses who actually need their services? What is it that the entrepreneurs or the RIAs that need to do?
Yeah, so I think number one, there's been a massive failure of branding. The kind of success that, as we were discussing earlier, mutual fund Sahi has had, RIA should have had. I mean, RIA Sahi hai, it rolls off the tongue a little bit awkwardly, but whatever, investment advisor Sahi hai, financial advisor Sahi hai, there has to be this ingrained in the public discourse. Because you're right, words matter, and right now words are used by different intermediaries in a way that absolutely confuses people who are outside finance. I mean, I've had people telling me things as absurd as, I have my own fund manager, and I was like, how rich are you that you have your own fund? And then guys like, apparently it's just a distributor who's told that person is a fund manager. So we really have to stop this free for all.
Okay. So you're saying that branding, so in terms of the right messaging, right communication?
In terms of, the right messaging, both from the community and the regulator has to enforce it. Like, we can't have people who are essentially agents say that they are advisors. That's wrong.
Right. Neil, I am an RIA, but I have this question to you, right? And we RIAs often say that we have to take money from the client, which is a hassle, which is a problem. There is a restriction on what you can say, how you can advertise. But don't you think these things are also applicable to a profession like CA? Like, CAs can't advertise, lawyers can't advertise. Both of them get their fees later on. So we are no different. And I am saying something which is very contrary, being an RIA myself. But you have had businesses this way in the past, and they have functioned and even flourished, and some of them have become very big firms. So is it our mindset that's a problem, or it's actually a problem? Very honestly, somebody from outside the industry, not an RIA.
So let's take the problem of advertisements, right? Why on earth should an RIA be paying a private entity 3,000 rupees every single time they want to talk about themselves when no other distributor, no other entity has to pay this. Why? I There's nothing wrong with having a code of conduct, provided the code of conduct is reasonable. It's not insane to the extent where you have to cross every T and dot every I, right? It has to be in spirit, something that makes sure there is no misselling, miscommunication. But this whole permission business is absolute nonsense. They have to make it zero fees. You have either you have regulator approve or self regulation. Unless there's some massive egregious breach of the code, why should you have to pay somebody for approval?
But don't you think that would create kind of a mis-selling also?
I think that at some level we have to trust, because when you are an intermediary, regulator intermediary, you know that आज नहीं तो कल आने वाला है regulator. तो ऐसा नहीं है कि just because they have removed the permission aspect, you're going to go crazy
Right.
with misleading ads. And अगर गलती से भी misleading ads डाली कहीं, there is a whole ecosystem out there to report it to the regulator. Competitors are just waiting for a chance. So nobody is foolish enough, I think,
Right.
to mislead in that way. At least not in the RA community.
Understood. And on the fees part, you think it's a problem or it's a mindset problem that we have as RIAs?
So I think it's a Indian society mindset issue that Indians, we don't like to pay for things. Even though we are actually paying for everything, it's just hidden. So currently, from my understanding, ARIA has asked SEBI to allow for automatic collection of fees by cancellation of units. And I think that's a reasonable proposal, as long as the customer has consented that you can auto debit the fees through that mode every quarter, every 6 months, whatever it is. At least it will deal with that psychological block about writing a check.
So see, when you compare it, sorry, but with a MFD, yes, you feel that you are less privileged. But there have been the example that I cited of CAs, lawyers, who always have worked on a model where they have raised the invoices and gotten the fees later, and they've done pretty well for themselves.
So,
and just sorry, but to add this, that is it because that CAs, lawyers are perceived as necessity, financial investment advisors, not financial advisor, investment advisors are not perceived as necessity, where one day there will be light at the end of the tunnel, and where you would be talking that मुझे घर में CA चाहिए, lawyer चाहिए, doctor चाहिए और एक investment advisor चाहिए. You think that will ever happen? So like couple of questions in this.
So couple of things are going right in terms of the psychology at the upper end of the spectrum in terms of wealth and education is going towards more payment of fees without any hassles. But I don't think yet the wider society has reached that level of maturity. And I think that CAs and lawyers also go through this struggle. As I said, my parents were doctors. They went through this struggle. Despite saving lives, they had to deal with negotiation on fees. So I don't think there is any harm in creating this option where, you as an RIA and I as a client, we are free to, I give you authority to auto debit, fine. What's the problem?
Fair point. I think 3 things I would really want to talk about. One we touched upon on wills and trust, but 2 other things where you've been very vocal about. One, eventually you want to do something as a venture as well on the international exposure side. And the second is on the credit card side. You've been a big proponent of how to use them well, discounts and all. And something very interesting you said on the international exposure in one of the WhatsApp groups, when somebody asked you that what percentage of your exposure should be global, and you said that India is 3% of the MSCI World Index. So I think 97% should be global, but that's not possible. I found it very fascinating, and I had never looked at things that way. But yeah, makes sense, right? If you want to go global, you have to look at everything, and India is only 3%. And US and China, Japan would be a larger part, even the entire Europe would be a very large part.
Yeah.
So some nuggets on why to do global investing, go international. And uh, why is it important, not just from a diversification perspective, but from an investment case perspective?
So people tend to get very influenced by recent history, not just the past year, but past 3 years, 5 years. And India has had a raging bull market. So right now, I would say the median investor is still hooked on to, in a sense, the drug of domestic equity over indexing, especially mid and small caps. Mids, I did another poll on Twitter, what is the largest share of your portfolio, and most people said small and mid caps. Now, scientifically, or at least if you think of mean reversion from a longer historical context, this cannot be optimal. It is an accident of birth that you and I are sitting in India, right? We could have been born in France, we could have been born in South Africa, you could have been born in Argentina, right? It's just a statistical chance that we are born here. Had we been born in those countries, would we have said that 90% of our investments should be in France or South Africa or Argentina? If we had said Argentina, it would have been a pretty major mess. So scientifically, how should one allocate one's capital in a truly neutral sense? It has to follow the world market cap, and in that context, India is 3%. So to follow the Ekvity, the All Country World Index, is the most neutral way of doing it. Now, I understand practically and psychologically it's not possible. So, probably a good midpoint is somewhere 20 to 40% of one's portfolio can be overseas. And I'm actually, quite unusual in saying this. I think the median financial intermediary says कि अगर करना ही है तो चलो 10% तक कर लो. I think that is a gross under allocation to overseas equities. I think it should range in that 20 to 40%. In terms of why, one other final reason that I would want to give, apart from the fact that you're diversifying away your risk of something bad happening in India, and bad things have happened in India, in the Indian market. People forget 1992 to 2002 was a zero return kind of decade. In more recent times, we have had these periods. So 2010 to 13, 2018 to 20 for mid and small caps. These are all periods of stagnation. A lot of the recent young people in the market have never lived through those years. They have no idea what it's like.
Right.
So that's one reason why you should diversify. I think second reason is that there are lots of growth companies and sectors which are not present in India, which you would only get in, say, the US. And I think the third really important reason is all countries have their cycles. We talk about sectoral cycles, we talk about companies going through cycles, but truly even countries do, and that is also applicable to India. Sometimes they are super cycles. So if you think of the US, I don't think the US has had a bear market since 2008, right? They are in a mega bull market.
Super cycle.
Yeah. Other countries have had mega bear cycles. So Japan since 1990s, early 90s till Abenomics, which was 2012, was a bear cycle, and since then they have actually been on a pretty large bull cycle.
And they just recently, few months back, crossed there.
Yeah. They had a major surge. So India के भी cycles है, होने वाले हैं, and it cannot be an answer कि हमेशा ही हम we are going to do fantastic 12% return, so you can take it as a guarantee.
Yeah.
Anything could go wrong, right? Politics is fluid. Geopolitics is fluid, as we have seen this year. So it's a no-brainer. Currency, I think, is the last and final nail in the coffin of always be domestic, always be in India. India at independence, rupee to dollar was 3.32 rupees, now touching 90. So in effect, anyone who has invested abroad at any point of time has made money on currency alone. Forget all the rest. So that's why I believe strongly in global.
Fair point. So But there are complexities to it, right? And on the regulatory side, on the product availability side, and taxation side, on estate tax and all. I'll keep that aside for some other day because those are things which are not in our control.
Sure.
But if I were to talk about the controllables that we might have, would it be right to invest in indexes of global exchanges, like a Nasdaq or something, or would it be ETFs or fund of funds, or would be direct equity? If given a choice from an investment case perspective, assuming all things equal, there's no regulatory barrier, there's no problem that way.
So I think it depends on the investor and their expertise and their comfort. I know people who have very cleverly picked tech stocks, including folks who have picked Nvidia and have made a killing.
Wow.
Unfortunately, I'm not one of them. I'm more a index and ETF kind of guy, and that also has made me not as much money, but it has made steady money.
Right.
So it really depends on who the investor is.
But when you want to do international, which is in future that you said, where would you look to try to create a difference?
Yeah. So now I want to first give a disclaimer that this is not investment advice. I mean, none of this podcast is investment advice anyway.
Yeah. We'll put that disclaimer anyway.
But since we are getting into very specifics about how I view, overseas markets, I want to emphasize that. So I personally believe that valuation-wise, US looks quite stretched, and although I do invest in the S&P 500, I have an allocation there. It's underweight. Underweight to what? So again, US weight in the Ekvity, the all country world index, is 65%. In my portfolio, US is sub 10%. Now, then where do you invest? India looks pricey, US looks pricey. Bachta kya hai? I think there are potential turnaround stories, and you can capture those through country ETFs. So, for example, Brazil has been a market of interest to me for a long time, and I think that turnaround has not happened there. I mean, Brazil has rallied this year, I think a double-digit kind of return after many years of stagnation, but this is still not even scratched the surface of where it can go. Why am I saying this? And some of this is, by the way, documented in my podcast with Swanand Kedkar, who does this for a living for institutional investors. So a lot more credibility than individual like me.
No, ex-Morgan Stanley.
Ex-Morgan Stanley, yes.
Okay.
Brazil has some of the highest real interest rates in the world. A 12% kind of real interest rate, where essentially meaning that their nominal interest rate, I don't remember exactly how much it is. I think it is around that 13 or 14% mark, and then inflation is minuscule. So their central bank has the scope to cut like an enormous amount of interest rates. That has not yet happened. They are a commodity economy, and so they go through these cycles. 2002 to 7 was a strong bull cycle. Again, after recession, they picked up, and I think 2012 was their another peak for them. So, can they have another cycle, a strong commodity cycle? I think there's a possibility, because they have had kind of a bearish market since 2013 to last year.
It's been like flat.
It's been flat, yeah. So this is documented well in one of our domestic mutual funds, the HSBC Brazil fund, where return since launch is -2% or so.
Yeah.
So I think that's a potential turnaround story, and I think what can propel it is either a revival in Chinese consumption, which was the trigger in their earlier boom cycles, or it can be maybe another country that Brazil manages to export a lot of commodities to. So that's one case that interests me. I'm also I have been reasonably bullish about the Korean market, because they have achieved such a mastery over our most frequently used items, our phones, our electronics, and they are cheap. By the way, all of these markets are very cheap compared to where India is.
Yeah.
They trade in either below 10 or below 15 kind of PEs. So Korea, by the way, has also rallied quite a bit this year. So similarly, I think with a little bit of research, one can take educated bets on
countries.
Yeah.
Sorry, I didn't want to push you on to specifics.
Yeah.
But I mean, if I look at global, and if I say put a 20-40% weightages to the global markets, where Brazil can be a very small part of it because it becomes risky in terms of the way it's played out. Korea can be slightly because we would associate far more transparency. But in that, still US will be a large part of it.
Yes. So I don't think one can go zero on the US. One can be underweight, which is what I am. But yes, US is pretty core to any global portfolio.
Right. And recently, even coincidentally, I was checking about the HSBC Brazil fund. And I think there's only one fund in the entire basket available for Brazil, which is HSBC.
Yes, in India, yes.
And I was surprised it has an AUM of 300 crores. if my memory serves me right. And I was like, wow, I mean.
Yeah.
300 crores is a lot of money from an India perspective.
It is, yeah.
So, I mean, people are waking up to this kind of a possibility.
Yes.
Now, I don't know whether the 300 crore has come through a push from the manufacturer or it is just individual investors doing it. Whatever, it was very heartening to see that 300 crore number.
Yeah, and this is the unfortunate thing about using mutual funds to invest abroad, because HSBC Brazil fund is an actively managed fund.
Yeah.
You might have a situation where Brazil rallies but the fund doesn't.
Yeah. So you need more country focused FOFs or ETFs.
Absolutely. We do have a couple of mutual funds which do this. There is one passive fund of funds which invests in global ETFs, but more would be good.
And I mean, just one question is, in the recent silver mania that we had, we saw that FOFs could stop, but ETFs cannot be stopped from trading. You think going forward ETFs will be a bigger pie because it will bring in more money and more flexibility to an investor rather than an FOF, where FOFs can stop and they can say, okay, tomorrow I'm not accepting funds, it's only redemptions or SIP that I can do, but ETFs will have to keep trading.
Yeah, I think so, and especially because ETFs are more popular with brokers, and today brokers dominate the landscape.
Okay. But also as an investment case where it doesn't shut down, right? And it still provides you an opportunity.
Yeah, makes sense.
Wanted to check your brains briefly on the credit card piece of things. Why specifically is post the UPI, and now obviously you can even integrate your credit card on the Bheem app and all. But credit cards are having a slow death in terms of penetration. They're not growing. Some of the market shares of the largest players have remained the same. And the industry per se, what was a very nice scenario in 2019-20, is somehow the acceptability has gone down dramatically. But you still are a big proponent of credit cards, or is it that how to use rewards is your go-to thing?
So from a consumer point of view, I see it as free money, and if it's somebody's throwing free money at you, why wouldn't you use it?
Right.
At a country level, why they are not taking off, I think UPI has a large role to play in that. But from an individual point of view, let's forget rewards for a minute, right? Just the fact that a bank is giving you 1 month of interest-free loan every month.
Yeah.
Free money.
Yeah, free money. I mean, I come from that school of thought, but somehow it's not work.
So there are a couple of reasons why people stay away. One is the older generation who are not comfortable with it, who get afraid of frauds and scams. I think banks are also not as forthcoming with issuance of credit cards as they might have been earlier, especially the high reward ones, right? It's not that easy anymore to get an Infinia. It's quite hard actually. You have to have a very, very high salary.
Yeah.
So couple of things, but I mean, this is going to be around for a long time, and free money is going to hopefully continue for a considerable time. So while it's there, let's use it.
What more can be done to really pass on this awareness that it is free money coupled with rewards, which is further free?
Yeah.
And there's the genuine thing over there that you can avail. And it's so surprising where in a country which is so price sensitive and which is so addicted to free things, credit cards are not picked up. What more needs to be done?
I think people have to be just shown the math. I mean, आपका साल में कितना भी कम खर्चा हो, like let's say कि किसी का बस 20,000 महीना खर्चा है, right? So that's 2.4 lakhs. Even that person can get a very basic credit card with a 2% kind of lifetime free kind of return. And for that person, that 2% matters.
Exactly. Again, comes down to awareness, education.
Yeah.
Got it. Since you've been in journalism since 2019 and till date continue to be so, there has been a shift in a lot of things in India or across the world post-COVID. How do you think the investment behavior of the young millennials, Gen Zs, Indians have changed? What is that one thing which was not there in 19 is there right now? Or has there been a radical shift at all?
So Gen Z, okay, so millennials are my generation, and we came into the workforce at a very different time, both in terms of stock market. So I would assume most millennials would have started investing maybe 2013, 14, 15 kind of years, which were okay. I mean, they were not bearish years for India's market, but they were nothing compared to what happened post pandemic, post-COVID. Also, we entered the market at a time when it was not that easy to invest. These apps were not so available. KYC took longer. Mutual fund industry was not as large, not as mature. All of these things were harder. So our outlook as millennials is a lot more conservative. Gen Z entered the market post-pandemic. All they have seen is a massive boom. They have had one year of correction, and I don't think we have yet seen what will happen if this goes on to year 2, year 3. I think 1 year is फिर भी ठीक है. They have been kind of educated enough or been told enough कि नहीं आप 1 साल का छोड़ो. But जब 1 का 2 होगा और 2 का 3 होगा, that's when we will probably see some things that we can't even imagine.
Okay. So the 2014 people, 13, 14 people and then 2020, 21 people, we're talking about very different mindsets.
Very different mindsets. Incredibly different, because they not only saw a boom in equity market, they saw a boom in cryptocurrency.
Now gold, silver.
And trading, right? I mean, where was this F&O mania in 2016? Nowhere.
Everything started post 2020, I think. Yeah. A lot of things changed. People sat at home, saw videos.
Exactly. Weekly expiry. The whole system, the whole financial system figured out this was a drug we can sell, and they went out and sold it like nobody's business. And they're still selling it.
Yeah. And I don't see that coming down big time, right? I mean, it's now ingrained in the system. It'll take a while to even unwind it.
The only thing that can bring it down is a firm regulator and a firm government. And I think SEBI is thinking about this, but I don't know if that resolve has become very strong to do something about it.
Just one last question on this front, Neil. Do you think an answer to everything is a regulation?
That's a good point. But honestly, there are some problems in capitalism that markets by themselves cannot fix. Especially in the financial sector. And in the financial sector, what is the outcome of a bad sector, right? The outcome of a bad sector is misallocated capital that is lost, spent away, captured by speculators. That leads to a lot of other social problems. So here there is a need to regulate.
Yeah, because it's kind of a responsibility of the father figure, the grandfather, to take care.
So think of it in the F&O market, right? When you have lakhs and possibly crores of retail investors losing money, who is making money? It was the Jane Streets of the world. Even now it is the sophisticated prop traders and the hedge funds. This is a transfer of wealth which our country simply can't afford. We want our retail guys to have money for their children, for their homes, so many things.
Right. So coming at the cost of socio-economic problems, I think even the time the youth would be investing in productive things could have gone down. I don't know the data, but could have gone down as when it talk about trading.
Absolutely. You know? A couple of months ago, a journalist with ET Now, Anurag, he interviewed his Uber driver and asked him because he saw that the driver had this phone on the steering wheel and he was trading. It turns out that the driver said he makes 20,000 rupees a month, and that year he had lost 2.5 lakh rupees. He lost his year's earnings in F&O.
Yeah, I think they were circulated all around. I think I saw that.
Yeah.
The government has shown some kind of interest, and I don't know if it's a direct comparison or parallel, but with banning of the betting sites, especially in the sports arena. So there is some kind of an intent, but all of us are waiting to see what happens to the weekly expiries. Is the bigger question where actually the devil lies, is what people say.
Yeah, so I am also not in favor of an outright ban. At heart, I'm a free market kind of guy. But I think SEBI can be pretty effective with these nudges. Ki bas aap weekly hata ke monthly kar do. They have already been doing that to an extent. They have increased the lot size.
Lot size also. And that's been a real game changer because the volumes have come down dramatically that way.
Agreed.
So I think the regulator is cognizant about it and is trying to do where it doesn't hurt the system, also keeps it open and even protects the investor. And I feel just one last point and then you can take it up is it's tough to be a regulator. It's not so easy.
Agreed.
Balancing everything and still coming out with the right outcome.
Yeah, no, absolutely. We think of regulators as essentially bureaucrats sitting up in some AC office deciding things.
Yeah.
But a lot of them actually work incredibly hard. I've seen it in action. Just to give you one example, a couple of months ago, I attended a shivir in Pune for unclaimed shares. And SEBI had organized it. So normally you would think that they would come, cut a ribbon, go home.
Yeah.
The whole time member was there on his feet for a good 6 to 7 hours.
Wow.
Talking to people saying, this is my card, call me if there's a problem.
And this side of the regulator never comes out, never gets published, never gets propagated, never gets shared. No. But this is also a very important side of the regulator. And I'm so glad we spoke about this because we often see regulators only in the bad light or talk not so good things about them. But it's important to talk the good things or the right things that they do as well and the kind of hard work they put in.
Absolutely.
And as they say in Spider-Man, with great power comes great responsibility. So it's wrong that they are just sitting in those plush offices and doing nothing.
Many of them work incredibly hard.
I'm sure they do because there's a lot of responsibility and the backlash also they would get is enormous if something goes wrong.
Yeah.
Great. So I think this is the last segment which comes from the team and the team puts in a lot of thought process behind it, and I really enjoy. There's zero contribution from me over here.
Okay.
But it's quirky, is what
Yes.
they say, because
Yes.
most of the team is young, so it's Gen Z related
Cool. Let's go
questions.
for it.
So a few questions bouncing away. If personal finance were a movie genre, what would it be and why?
A romance?
Really? Okay.
No, not every romance is like lived happily ever after. There is fights. There are.
Thanks for the disclaimer. But yeah, sorry, go ahead.
I mean, a truly good romance movie has all of that masala, right? Family भी आती है, झगड़ा होता है.
Right.
But-
Wow, interesting. I never thought you'd answer that.
Yeah.
Romance. Okay. I think this one question can do, if circulated well, do a lot of good to the personal finance industry. You're great at simplifying finance, and we know it from years now with the wonderful work that you've been doing. If you had to explain SIPs to a 10-year-old using a pizza analogy, how would you do it?
I would say that if you can stop yourself from eating one slice, you will get 2 slices tomorrow.
Okay.
As simple as that.
So the instant gratification to something.
Yeah, that's fundamentally how an SIP works. You reduce your consumption today.
So you get something for tomorrow.
Yeah.
Can I just prick something over here and say that, but pizza, am I going to be able to have after 20 years too, rather than have one today? How would you address that if I were a kid posing that question to you?
So I would say that I'm just saying it for one slice, right? Other slices you can and should have today. I mean, don't be extreme where you say the whole pizza I'll put aside.
Put aside. Okay. Understood. Fair point. You hosted a podcast yourself. If you could invite 3 dream guests, living or dead, for Let's Mint Money reunion, who would make the list?
Okay. I mean, I will say maybe 3 living people who are doing great work and very prominent voices in this space. In fact, I probably should invite them now that you asked me.
Great.
So, Dhirendra Kumar,
Okay.
CEO of Value Research. Monica Halan, who was at one time my boss's boss
Okay.
at Mint, author and again a very sort of strong
Proponent of personal finance and its advocacy and its
yes.
literacy.
Yes. I think the third is a tough one. I'll get back to you on it.
But you at least have 2 now.
Yes.
For your next podcast.
Yes.
Suppose money could speak, what do you think it would tell Indian investors right now?
I hope you've learned your lesson. I mean, especially given what has happened in the past year, anybody who has like gone crazy on
Indian equities.
Yeah.
Okay. If the fine print had a mascot, what would it be and what financial lesson would it stand for?
I think it would be an owl because
Okay.
in this world you can't sleep. You have to be vigilant to all of the trends that are happening, all of the good and the bad things.
Okay. And one last question. If a headline were written about your financial journey 10 years from now, what would you want it to say?
That he did well for himself in the end.
Wow.
I mean, the journey was bumpy. No journey is fun if it's just all easy.
Easy. It has to have its own sets of ups and downs.
Yeah.
Wonderful, Neil. Was really amazing chatting with you for the last, I think, close to 2 hours maybe. Learning about the impact of grandparents that you had, and which is very nice of you to say that even before your birth there was an impact, and how it has kind of shaped for whatever you are standing for today, to the kind of pains you've taken for the RIA community. And so personal thanks from my end. I have seen that, I have read those things, and you still continue to do so. of all the countless posts that you've put in. I'm really sure that a lot of people read them very seriously, diligently, and gain a lot of insights, including us at Ekvity. And now that you've stepped onto your entrepreneurship journey with a very nice cause and a problem that you want to solve for the larger humanity and a larger set of population in India, and for the new things that you've already planned, that you intend to do, which are again about solving problems. It's been an absolute joy to know you. I think for the past, say, 1 year, I think very brief period, but multiple times we've met, and I've enjoyed every conversation I've had with you, verbally or non-verbally, on Twitter or at the lot of podcasts or news channels. It's been an absolute privilege for us to have somebody like you in our community. Thanks for doing all the good work, and please keep doing so. We need more people like you.
Thank you so much. Thank you so much for having me.
And we need more Neil Borates coming out of wherever they can to create a difference to the entire financial services community. Thank you so much once again for your time. It was a pleasure.
Thank you. Likewise.
Good night. Thank you.